Hello everyone. In this video, I'm going to show you how to use Morningstar Direct to extract some performance and risk information about your portfolio. In the last video that I made, I showed you how to create a simple portfolio of a few stocks in Morningstar Direct, and I'll put the link to that video down in the comments for this video. So I'm going to start out here with the the splash page for Morningstar Direct, kind of the online version of it. And last time, again, I demonstrated how to create a portfolio. And to do that, we go to Portfolios, and you can see here the portfolios that I have, and the one I showed you how to make was called First Portfolio. So that's where I'm going to start today. I'm going to open up that portfolio, and there are some questions I want to answer about this portfolio that I've made. So our portfolio consisted of three different stocks: Microsoft, Lowe's, and then Walmart. And our benchmark that we're using is the S&P 500 total return in US dollars. And I've got some questions that I want to answer, and I've created just a little document here that shows it. It shows them. So the first question I want to answer is, what has the annualized total return of our portfolio been over the 1 year, 3 year, and 10-year horizons? And then just a common one we often see when we look at performance of a portfolio is, what's been the growth of a certain amount of investment. Oftentimes it's a $10,000 that we'll start with, and so we'll see what that is. Another one is, what has been the max drawdown or the maximum drawdown, and this is a measure of how did the portfolio perform under existing scenarios, historic scenarios. And we're going to look at three of them. We're going to look at the financial crisis, we're going to look at COVID, and then we're going to look at the dip we had in the market in 2022 when we had very high inflation in the United States. After that, we're going to move on to allocation and ratios. In this case, we're going to look at the style box to see where our portfolio sits relative to the S&P 500. And then finally, we're going to finish up with showing a holdings correlation of the different stocks in our portfolio. So let's go back to the Morningstar Direct page. And what I want to do here, in order to access this information, is go to the dashboards. So you'll select dashboards up here, and you'll see here it says performance, allocation and ratios, risk model, and scenarios. We're not going to go through all of these today. We're just going to answer those questions that I have out on the document there. In order to adjust these windows within your dashboard, you need to select the kind of pencil here tool, and it pulls up this column on the right hand side of the page that says Edit, Charts, and Tables. It's got different headings for each one here: allocation, analyst research, and so on. It doesn't have to match the part of the dashboard that you're looking at, although that's what I'm going to do today, just to keep things kind of straight for you. We see here the default in the performance dashboard is the returns bar, which shows the trailing returns over different periods of time. So we have our portfolio, and then we have the S&P 500 benchmark, 1 month, 3 months, 6 month, year to date, 3 years, 5 year, and 10 years total returns. We see the rolling return. It looks at the past 12 weeks of returns for each week. A time series down below, and then finally the growth of a $10,000 investment over time. We're going to play with a couple of these, and then I'm going to show you how to pull in other charts and tables into your dashboard, and then how we can output these in both PDF form and Excel form. So let's go back to our questions here. What is the annualized total return of our portfolio been over the 1 year, 3 year, and 10 year horizons? We switch back here. So we get the answer to that in our return bar here. If that is not in your dashboard, maybe you've changed some things in it and you need to pull that up, you can just go over here to where it says return bar, pull it over, and it's going to pull that up, and I can make a few changes here. I'm going to enlarge it a little bit so you can see it. So this gives us a graphical representation of the return for our portfolio. The blue bars here compared to the S&P 500 shows us what's going on there. I can change some things here by pressing the gear. I can change it from a chart to a table, which is what we were looking at before. I can change the dates. I don't really want to. It's giving me the dates that I want. I can change the time periods. I may want to here because I have a lot of time periods. And I wanted specifically the 1 year. I didn't want the 1 month, 3 months, 6 months, or the year to date. So I'm going to press done there. And I wanted the 1, 3, and 10 year, so I can take out the 5 year as well. And you may want the 5 year, and usually the 5 years are in there. I just didn't include it in my my document there. So if I'm looking to answer the questions in my document, I can do that. My 1 year return for my portfolio has been 16.17%. This is the total return, so it's going to include both dividends and capital gains. For the S&P 500, it's been 15% over the past year. The 3 years has been 24.8% for my portfolio versus the S&P 500 at 20.57%. And the 10 year for my portfolio has been very good, 25.63%. And this is the annualized per year return compared to the S&P 500 at 14.63%. If I want to put this into a report, I have a couple of different options. You saw before I could put it into a chart. So I can go in the view, I can have a chart, I can have a table, I can have it split where it provides both the chart and the table. I'm going to stick with that. And then once I've done that, I can export this by selecting this middle button here. And it's sometimes it gives me the option of a PDF or Excel. In this case, it's just giving me the option of Excel. And I can open that up, pull that over here for you. And it provides me that table that we had that I'd shown you. And we can then put this into a report showing what and answering that question that I had in the document there. Let's move on then to the next question that I had. What has the growth of our portfolio been over the past 10 years? And for this one, we would often use this growth here. This only goes back 3 years, so I want to adjust this. So again, if I wanted to put this window in and it's not in, I would go to performance, I would go to growth, and I would just put that in there. And again, I wanted to show for the past 10 years, so I need to adjust it here. So my start date is going to be 10 years ago instead of 3 years ago. And I have the option, just to show you that, to put in a specific date. So let's say I wanted to go from the year end of 2024 to the year end of, the year end of 2014 to the year end of 2024. I could put those dates in there as well. But here I'll just keep it simple and say, I just want to see over the last 10 years what my portfolio would have done. So that's what I have here. Back to 2015, right now it is December 17th, 2025. We're going back to 10 years. And we see here that, and let me make this a little bit larger. We can see here that our portfolio, which is the blue line here, our first portfolio, compared to the S&P 500, our portfolio would have generated, if we invested $10,000 back 10 years ago. Today, if we just reinvested our dividends and we just kept our money in it, we would have $125,000 a day. That's a pretty nice return. The S&P 500 didn't do too shabbily, but not nearly as well as our portfolio. It would be worth $41,529 today. And again, we can export this by pressing the middle button. Now, I showed you before how we can export to Excel. We can also create a PDF file, and again, include that in a report that we may want to generate. And this is what the PDF would look like. So we've answered that second question. Finally, what has been the max drawdown for the financial crisis, for COVID, and for 2022 inflation? So this is an important thing to look at if we have to draw money out of our portfolio for costs that we incur year to year, or for an investor, if they're investing for retirement, they need to pull money out every year, or you're investing for an institution that needs cash with regular cash withdrawals. What we want to be able to see here is if, a scenario happened that's been, we've had a few in the past 15 years where there's been a significant decrease in the value of the market. The market's, has come back in each case, but if we are restricted on the percentage that we can withdraw, that could create a problem if we need a certain amount of cash quickly after the crisis has, or the issue in the market has occurred. So we're going to take a look at here and see what the drawdown was for each of these different scenarios for both our portfolio and for the S&P 500. So for this, I'm going to go to where it says historic drawdown. This is not one of the default windows in our dashboard, so I'm going to need to pull that over here. And again, I can delete out the extra things that I don't need. Now, I had 3 different time periods that I wanted to include to see what the drawdown was. And this time period, the default time period of 3 years, does not cover that. So I want to change this. Again, I'm going to go to the gear here. My start date, I want to go back. I'm going to go back 20 years because that's also going to include the financial crisis, and that was one of the things I wanted to look at. So this includes the S&P 500, which is our red line here. And then our portfolio that we created with those 3 stocks is our blue line. One thing to note is if we have stocks in our portfolio or other investments in our portfolio that don't go back this far, then we wouldn't be able to use this entire time period. So we can see here, the first thing we wanted to look at was the financial crisis. And at the kind of the peak of the financial crisis, February of 2009, this is where the stock market had declined by its greatest percent. We can see our portfolio, our first portfolio, had a decline in value of 52.52%. So you can see it's pretty substantial decline in the value of those investments. For the S&P 500, it was 50.95%. So our portfolio did slightly worse than the S&P 500, but not by much. So if I'm out here and I want to answer these questions, our max drawdown for our portfolio, for the first portfolio, it was negative 52.52%. For the S&P 500, it was 50.95%. And again, if we have a spending policy of, let's say, 5%, and that's our recommended spending policy where we don't want to exceed 5% per year, that can create some problems if we have a specific cash need, if we have that big of a fall in our portfolio. So that's one thing we want to look for. With COVID, so COVID, the kind of the height of the COVID time period in terms of the stock market was March of 2020. This is where stuff started closing down. People started getting worried, and that's where the stock market really fell. And that's this drop down here. You can see here, March 31st of 2020 was kind of the low point for the stock market. And so that's what I'm going to use here. Our portfolio actually didn't do too terribly. It fell by 7.68% compared to the S&P 500 at 19.6%. So first portfolio was 7.68%. The S&P 500 fell by, or I won't say fell by, the return was negative 19.60. Let me double check that real quick. Yeah, 19.60%. Then finally, in the inflation event, I'll call it for 2022. It's going to be out here. Really, the peak of that was September 30th of 2022, based on what we have here. Or October 31st, 2022. Really don't see a difference there. I'll use September 30th, 2022. For our first portfolio, it was a drop of 29.93%. And then for the S&P 500, it was a drop of 23.87%. So ours was, the first portfolio was 29.93%. And S&P 500 was, again, 23.87%. Okay, so again, we would use these to kind of get an idea of how risky our portfolio is and what our losses would have been under certain scenarios. In each case, at least in part, the markets have returned. They have come back. We did see positive returns afterwards. But if we were needing to withdraw money according to a schedule based on the value of our portfolio, this is where that max drawdown value becomes very important. Moving on to our next area, allocation and ratios. I want to pull up the style box. It's something you'll commonly see, get an idea of where our portfolio is relative to our benchmark. And if you're in the default dashboard, it's going to show up here. Up here is the style box. We'll make this a little bit larger. We'll get rid of some of this other stuff here so we can take a good look at this. So our portfolio is made up of very large companies. You can see that here outside of the style box. And they tend to be value companies. So compared to the S&P 500, which is, again, the largest 500 firms on U.S. exchanges, in terms of market cap, dead set in the middle for style versus value and growth. And we are looking here at the current value as of 12/8/2025. Really not much else here to change. We can look at the historical portfolio. If I want to change the date here and put 12/5/2015. Oh, nothing's there because I don't have any difference in my portfolio on that date. So we can include that if that's not in your default dashboard here. Where you're going to go for that, you're going to scroll to allocation, go to style box, and just pop that over there. All right, so let's move on as that's thinking. The last thing I wanted to show you was the holdings correlation. Oftentimes what we want to do when we create a portfolio is to find investments that have a lower correlation with each other in order to get a good diversification benefit. So let's go out here and pull that up. So I'm going to go to my risk model. And again, I wanted to pull in the correlation. That is not one of the options on the, where it's not in the default dashboard. I'm going to scroll to holdings. Not one of our options up here, although we can add one if we wanted to. So we can add a tab here if we want. And I can call this correlation. And then I can just pull that over here. And this goes 3 years. I will change this to include a different time period. So over the last 3 years, this shows the correlation between our 3 different companies, Lowe's, Microsoft, and Walmart. It's calculating the correlation of returns between the two. We can see here that Microsoft and Lowe's are fairly low, have a fairly low correlation of 0.07. So not a lot of, it's positive, but it's not very, very large. And the correlation between Lowe's and Walmart is also fairly low at 0.31. For Walmart and Microsoft here, it's also fairly low at 0.25. So even though we only have 3 stocks, it is fairly well diversified in terms of correlation between the different investments. We can change the time over, and not just using the last 3 years, we can go back over any period of time in which all of these companies existed. So I can go back here 20 years. I believe all of these companies were around 20 years ago. They were. You can see here a little bit higher correlations overall, but still a fairly well diversified situation. And then again, like I said before, we can output this to either Excel or a PDF file. I can also change this from a chart to a table if I want to just show the numbers there. So let me just output that. This is just available to output in Excel, and really that makes sense because we don't have a chart to show. So that is it for this video. Please let me know if you have any questions on how to use Morningstar Direct, or if you have any questions about the results that we saw here in the video. Thank you.